But to take this discussion forward, we have Bhavin Shah, founder and portfolio manager at Sameeksha Capital, joining in with us. Bhavin, good morning. Thank you so much for joining in with us. I was just saying that Accenture numbers really didn't seem bad. Now, if we didn't have these issues today of geopolitical tension, what are your thoughts coming in for Indian IT companies as well as overall the performance there?
I think there are multiple factors at play apart from the geopolitical factors. There is obviously in geopolitical factors, I don't know what all you include, but clearly there is uncertainty with respect to U.S. Growth. There is a cuts in spending coming in the government area, but broad, much more important than all of that are a few other things. One is how Gen AI is changing the way code development is happening. And I think that is visible to anyone who does anything with code development. And I think it is sharply reducing the need for number of programmers you have. And while this faster pace of development may lead to superior applications and so on, I also feel that it's that will take some time, and more importantly, overall, there is going to be a reduction in the number of people required to do programming. And I think clearly Indian IT companies have a significant portion of their business that is tied to time and material, and that I think is a clear impact. The other important thing to remember is that the overall size of the market was seeing a slower growth prior to COVID, and I think now that COVID reset has happened, we are back to that trend line, and that trend line is sort of shifting, heading down in terms of the growth rate. There is also a factor of GCC, the Global Competence Centers. What we are hearing anecdotally is that the growth rate. I mean, they are still hiring, so there is some shift happening also from the Indian IT companies to the GCCs. And one of the data points on that is that if you look at last 12 months, how much revenues Accenture added with respect to the US business versus how much revenue Indian IT companies added. Indian IT companies have added very, very small number compared to Accenture. So there is clearly also that loss of market share that is happening. I mean, I think, see, there used to be a time when companies like Accenture would grow at a slower rate than Indian IT companies. The reverse is happening now. And as Accenture is available at a lower valuation than Indian IT companies.
Okay, Accenture is lower than Indian IT companies in terms of valuations. So then right now, should we actually, what should we be expecting for ourselves in Q1 FY26 now? Anywhere that there is value or in terms of earnings, mid-cap, large cap, what are you expecting in terms of performance there?
So I think there could be some very, very selective mid-sized companies that, are still enjoying double-digit growth because, they are small in size and they have bigger opportunities to play. And I think, they could be also, they all have corrected, in this along with the large companies. So there could be some opportunities very, very selectively there. But the overall tone for the sector is going to be of lower growth, profitable growth, good cash flows, but much lower growth. So that valuation reset, I think it has already happened a fair bit, but more further could happen.
Bhavin, good morning. Thank you for joining in. Let's break it down now. I was just reading a note a couple of days ago where it spoke about Infosys completing a few acquisitions in the last couple of months, and that could be a trigger for the company to raise its guidance for FY26, which was currently around 0 to 3%. Do you see that happening this time around? Will those acquisitions that they have done be beneficial to them in the current financial year, so much so that they will raise their guidance?
I mean, I don't know, but I think acquisition obviously brings some extra revenues. In fact, even Accenture has talked about two numbers. One is the overall growth guidance, which seems not so bad. But if you take out the acquisition part, then the organic growth is only like 3%, 3 or 4%. So I think acquisitions can lead to higher growth and might help Infosys as well. But obviously that means that comes at the cost of cash flows. So then we are looking at free cash flows and free cash flow growth, and and that's ultimately what matters.
What's your pecking order then within the sector, Bhavin? Large cap IT, mid cap IT, where do your preferences lie?
I'm largely avoiding the sector. One or two very, very small bets on mid-cap IT and sort of companies that are more catering to the system integration, distribution kind of businesses across many countries rather than the pure time and material type of businesses.
Okay, Bhavin, thank you so much for joining in with us on the show, giving us an understanding in terms of, what we should be expecting from the Indian IT companies.